Hey there, Casey Dim at TaxSaleAcademy.com. In today's video, we're diving into a strategy that often gets overlooked, but can be incredibly effective if you do it correctly. That is buying delinquent tax properties before they ever reach a tax sale. If you're willing to put in the effort, you could potentially score some great deals while also avoiding the bidding wars of an auction. So if you're the kind of investor who's good at tracking people down and negotiating, this strategy might just be for you. Let's talk about these specifics. What exactly does pre-auction mean? So, properties that are delinquent on their taxes, when you're late paying your taxes, eventually the government is going to foreclose or a tax lien holder is going to foreclose. So we're talking about tax liens that have not made it to the point of foreclosure yet, or tax deeds that have not yet been sold, and the state law allows for redemption. In most cases, the property will eventually be sold at a tax sale auction of some sort or foreclosed upon if it's a lien, but there's a window of opportunity between the time the taxes go delinquent and when they lose that property. During that window of opportunity, the right to redemption will allow you to contact the owner directly, negotiate with them directly, and buy the property for them. Now, check on your state laws for the specifics when it comes to that time frame. So why would somebody want to sell the property before it goes to auction? The main reason is that they're often in some sort of distress. The sellers may have given up on saving their property or simply cannot afford to catch up on the taxes. Or they might just want to walk away from the property for whatever reason, and they're willing to do it for a fraction of the values of the property just to get something for it. If the property goes to an auction, a lot of times, depending on the value and the surplus funds that are left over, all that kind of stuff, a lot of times they might not make a whole lot of money for it. They might not want to go through that process. They might not want to have their name attached to a foreclosure. So you step in, negotiate with them, allow them to get something out of it instead of just losing it entirely. So the idea here is to use the tax sale list that the county puts out as essentially a distressed seller's list. That list is going to be publicly available, and it tells you which properties are headed to a tax sale auction. But instead of waiting for that auction, you take that list and you start contacting the owner before the auction happened. Every name on that list will represent somebody who is likely going to be motivated to sell. In many cases, these are owners that might not know they have other options, so reaching out to them could be a win-win situation. Now, I'll be very, very blunt here. This takes effort. It takes a lot of effort to find these sellers. It can be very difficult. You're not going to just call up one person and make a deal on the spot. Most of the time, these owners have already moved. They could be hard to track down. They might even be deceased. They might just not want to talk about anybody because they know they owe money on that property. And anybody that calls to inquire about the property, they're just trying to forget about it. So you can track down these folks a number of different ways. Skip tracing is one of the most effective ways to locate owners who have moved or who have seemingly disappeared. There are plenty of online services that provide that information for a fee. Also, consider social media. You can find people on platforms like Facebook and LinkedIn by searching for their name and their location. You'd be surprised at how often this will work and how often people will respond to messages they get through social media. Direct messages get read much more often than conventional mail is read to certain demographics. So keep that in mind. Another way is neighbors and public records. In some cases, you can speak to neighbors who might have contact information for them, or you can use public records to track down the current contact information for the owner or their family members if they have passed away. The key here is to be persistent. You will need to dig through leads and follow up like crazy. You may have to try multiple methods to get in touch, but when you finally do, it could lead to an incredible opportunity. Something else that's a rather important caveat here that you need to keep in mind. Any property you buy before the tax foreclosure auction is likely going to still have liens in place. This means any private party liens, any mortgages, any HOA liens, all that kind of stuff needs to be accounted for when you are negotiating for that property. So you're not just paying off the back due taxes, you're paying off the back due taxes plus any other private party liens. So when you negotiate the purchase price, make sure it includes enough to pay off those liens if they apply. So for example, let's say a property has $5,000 in back taxes and maybe another $5,000 for something like a mechanics lien or an HOA lien. You need to factor in that your offer must be at least $10,000. So you're not just negotiating for the property itself, you're negotiating for the property and the cost to clear those liens and the cost to close on that property. Speaking of that, one massive benefit of buying a property before the auction is that you'll typically be able to get an insurable title. So you get title insurance when you do pay off those liens at closing and when you close it through a title company or a real estate attorney. So when you buy a property at a tax foreclosure auction, you're going to usually have to get a quiet title or spend some money to clear that title in order to get title insurance moving forward. When you buy it directly from an owner, you will have clear title in most cases, meaning you'll avoid that time and expense. It's also important to understand this is a numbers game. You're not going to get a deal every time you contact somebody on the tax sale list. In fact, you might have to contact dozens and dozens of people before you actually find a motivated seller who's willing to work with you. Some owners will already have plans. Some just won't respond, and others might ask you for more than you're willing to pay. The key here, again, is persistence combined with volume. If you're good at tracking down people, if you're good at negotiating sales, if you're good at talking to people and navigating the process, this can be a very viable and profitable strategy. And the more you do it, the more you'll be able to build your systems on reaching out and closing these deals efficiently. So there you have it, buying tax foreclosed properties before they hit the auction. It requires effort, creativity, and the ability to track people down, but it's an incredible way to land profitable deals while sidestepping the competition at the auction itself. If you're up for the challenge, this strategy can be a game changer. Just remember, perform your due diligence, factor in any of the existing liens, and always negotiate with those costs in mind so there are no hidden fees at the last minute. And speaking of the last minute, make sure you're able to get this deal closed prior to that redemption period running out. Hopefully this helps you out and provided you with a new strategy you can test out to see if it suits your investment styles. As always, if we can be of any additional help, make sure you check out our training platform at taxsaleacademy.com. We would love to have you as part of the community. Hey, take care, folks, and make it a successful day. Bye-bye.